We are here, we are here, we are here. On this amazing day. Everyone, this is Cam Jones FX Daily Analysis. Disclaimer, I am not a professional. Please watch these videos at your own risk. These videos are for entertainment purposes only. Thank you. Friends and family at Global Traders Elite on Discord. Families and friends will prosper. Let's get back to business. The time now is 7:48 a.m. Today's date is December 29th, 2020. The pair we will be looking up is AUD CAD. That will be the Australian dollar versus the Canadian dollar. Alright, let's get back to business and see what's going on in the market. So we're going to mark up on a monthly to see what's going on. Stretch this out for you guys so we all can see what's going on. Grab my blue paintbrush so we can see that the market started off in the middle here. The market came up, reached high highs, came down, came back to retest high highs for a second time, had a few touches within there, which I see 1, 2, we have 3 and 4. The market wasn't able to sustain the whole of the resistance. It broke back down, tried to reach previous areas of which we can see of where the market started off at. Market came down, came back up to break down further to create an area of lower lows. So at this lower lows area, we have about 1, 2, 3 touches. The market wasn't able to break through the resistance, came back up. Wasn't able to reach up to high resistance of the previous area. Wasn't able to reach this. So the market came back down to come back up a little bit. Looked like it's probably retesting something to come back down, to come back up. And it just kind of bounced around the range for a little bit, came back to lower lows, and now we see some type of spike down. So something happened here. The market came back up, created that looked like that single bottom. Got another one there, with price retesting something here from this previous area. Market came up, trying to rally up back to the top of previous high highs from over here to hit this resistance. Wasn't able to reach it. Came back, dropped down. Now it's in some type of range. Look like here. So it basically bounced around in this range for some months, some days, some weeks, some hours, and probably some years. Definitely some years. The market came back down to reach another level of lower lows once again, as we can see the previous touches. 1, 2, 3, 4, 5, 6, 7. So the market is back to the areas of lower lows, and it looks like it's trying to come up. So we got to see what's going on in this area here. So what I'm going to do is I'm going to clear my screen. Okay, so what we're going to do is we're going to mark up today on the 4 hour, and we're going to take it down the time frame and maybe the 1 hour. So we'll probably be working with the 4 hour and the 1 hour today. So let's see what's going on in the 4. So we already know from looking at the monthly. Let me go back to the monthly, so make sure I put this out here. So we already know from the monthly that price reached some type of low and it's trying to come up. So it seemed like for right now, from the monthly, let's say we're in some type of uptrend. Okay. So you're gonna remember that we're in some type of uptrend. As we go down the time frame, let's go check out the 4 hour. Let's take a look at what I see. Let's take a look at what we see in the market. And so what's going on here is this was the area of the lowest lows, and we see that market coming up. So we can see that we are definitely in some type of uptrend. So just the lower lows, and We up here right now at the higher highs. Let that slice to the middle right there for now. So something's going on here. It's trying to, price is trying to respect this trend line. Got a few touches coming up. Touch, 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 broke through, retouched the bottom, came up, rolled it back on that trend line. Now we gotta see what's going on here. So we're gonna go down the time frame. So if we feel like the market's going up, so we gotta create a next area of higher highs for the market to go to. So what we're gonna do is we're gonna scroll over to the left. So we probably gonna need some type of pointer to see what's going on that other side. So what we can do is we can zoom into this area here, and we know we're waiting for price to break above this area to go up, but we don't know how far it's going up, so we're gonna look for that. What we're gonna do is we're gonna grab our, normally we use raise, but this time we're gonna grab our SR line. Let's grab our horizontal line, I meant to say. Let's go with a horizontal line. So we're looking price to break, let's say above this wick, or let's say above this body of these candles right here. So we're looking for price to break either, let's do two resistance lines. So we're going to do above the bodies, on top of the bodies, and we're going to do above the highest wick in this area here. Okay, so we can see that if price jump into here, it probably will bounce, and we'll wait for it to break out the top of this resistance line to go further up. So we are in that uptrend. If we go down to, let's zoom out, we're going to zoom out and we're going to scroll all the way to the left, and we're going to see what's going on. So we can see where price is trying to touch. So price is trying to touch this area right here. So it's trying to break through. It wants to break through this area here. After price reach this area here and breaks through, its next is we're probably trying to reach and break through this area here. So one at a time for now. So we're gonna say that price is trying to break through this area here. So we're gonna put a horizontal SR line or horizontal line right above these bodies. Let me zoom in for you guys. So we're going to put a horizontal line. We're going to put one on the body, and we're going to put another one on above the wicks. Okay. From there, we're going to zoom back out. We will be headed back to where price action is located, and let's see what's going on, and so we could find out what is going on in this area. So we're going to zoom back in to price action, and let's see if we can find something. So we can definitely see that we are in a uptrend, and like I said before, if price, so we can see that price is respecting our trend line at the moment. So you see the touches, 1, 2, 3. It reached higher highs. It reached this resistance to come back down, respect this trend line again. Like I said, like I said in previous videos, the trend line can be moved, it can be tightened. We can bring it up a little more here, you can bring it a little lower. It all depends on your eyes and what you like to see. So let me clear this one more time. Let's grab our blue brush, paintbrush. So market came up, respected the trend line, rode it, hit the resistance, wasn't able to break out the resistance to go further up. The market came back down. It's doing some type of consolidation here before it probably would try to reach up to touch this again. If it doesn't break, it'll probably retest the line again, play around in here to try again. And if it doesn't really keep on if it keeps on trying, it doesn't break, what the market is going to do is going to go down, retest something up there, down there further, to come right back up later on. So if we catch that breakout, let me erase the screen one more time, let me erase the paintbrush one more time. So if we wait for the price to bounce up and down and hit this trend line, let's say if it breaks out, let's take a look and see how many pips we will make if it breaks out this blue line of this resistance right here, the second resistance line that we have set up. If price broke through there and it went up, let's see how many pips are we looking at. So we'll probably take the trade here, take it all the way up to the top. So this is an amazing trade, everyone. This is 119 pips. So it could take a few days, it could take a few hours, it could take a few minutes. It all depends on the market. Just keep your eyes on the market at all times. Or I should say when you have the time. So keeping your eyes on the market consists of looking at these time frames. Choose a time frame that consists of anybody can trade, everybody can trade. If you have a 9 to 5 or don't have a 9 to 5 or whatever your life situation is, if you have the time where you can look at the market consistently throughout the day, you can watch it every 4 hours. If you can't watch it every 4 hours because you have a busy day, you can watch the market on a daily. So you can watch each candle form on a daily, one at a time. Each time a candle closes out, we do know that will be on a daily candle. If you have a lot of time on your hands and you want to look at the market often and a lot, whatever you feel, you can watch it every hour. So every hour on the hour, you can see the candle close and which direction the market is going to go in. If you really don't have time for that and you have time to look at the market once a week, then you're probably a once a week person. And you'll come in here, you'll look at it on once a week. And that'll probably be like end of every week will be like a Friday night. You'll probably see the candle weekly close for the trade to take. So for you to take a trade, enter a trade to see what's going on in the market, you can look at it weekly. It all depends on really just your schedule and what time frame and how much you want to put into learning Forex and watching videos, or learning the market and watching the market, and watching my videos as well. So if we went up, if the price broke through, which we're looking to do, it'll be an amazing move, 118 pips, and that'll be great. So that was AUD CAD. We are done with the markups there. Now we're going to go take a look at some patterns. Let's talk about some patterns today. Let's see what's going on. Let's see what we want to work with. Let's work with the rectangle bullish pattern. I think I did this before. Yeah, we up here. Alright. Let's see. Okay, we're going to start on the bearish candle patterns. Okay, so when it comes to the bearish candle pattern, so bearish means down. So down mean bearish, bearish mean down. So the way we can do this is if we look at the shooting star. So when you think about a shooting star in life, you would think about you being on the ground and you looking up at a shooting star in the air, or a star in the sky, right? So if price is going up, coming from somewhere, coming down from somewhere, coming up, and a candle form, and it's not like a full candle where you have a whole lot of wick, which we can see here in a small body, it shows that the market is exhausting itself here, so it's about to drop. So once you start seeing it drop, you have the second candle come up, and you see the second candle going to overlap the first second green candle, and then you have the third candle that's going to close out here, which confirmed that it overlapped all three candles, which was the previous green candle here, the second green one, and the red one. So it's a chance that the market's going to go down. When it comes to the hangman, hangmans is similar to the shooting star, but they call it the hangman. I'm not going to get into details about that. So when the price is coming from somewhere, coming down, going a way up, we have something called a hangman, and we have a whole bunch of wick at the bottom. So once again, it just shows that price is going up to some area of high highs, and it is not breaking out. So it's losing momentum. We got a whole bunch of wick here. Another candle is formed, and it overlaps the first or the second green candle here. So it overlaps this, and then a third red bearish candle forms, and it overlaps everything. So if you had an imaginary line, you brought it over here, we can see that it overlapped this green one, it overlapped the second green one, candle, and overlap the hangman. So if it overlaps, I mean the market's coming down. Let's do one more. So last one, we're going to look at the gravestone. Let's break down the gravestone. They all do the same thing, as we can see. Price coming up for somewhere, and we have something called a gravestone. And what a gravestone look like? It looked like a upside down T. So you got this upside down T. It means it's just like, it's all similar to the gravestone. It's similar to the shooting star. It is similar to the hangman and more. And what we see is the market came up from somewhere. The gravestone was formed. So that shows all this wick shows that the market wasn't going to come up. You don't even see a body of the candle. You don't see no red. You don't see no blue. And it's a doji. So gravestone doji. And we remember from previous times, if we look back up here, dojis are neutral candlesticks. If we look right here, so we got the doji, which is a neutral candlesticks, spinning tops. Another word for it is a indecisive candle. That's a candle that don't know what it's going to do. So if we know that the doji is an indecisive candle, and we see this doji form as a graveyard doji, then when it's indecisive, that means you don't know what it's going to do. So we don't see a body. All we see is up down T. We see a whole bunch of wick where price pushed up and it closed down here, and then the second candle was formed, was a bearish candle, and it didn't overlap the second candle, but the third one overlapped the previous one. We got three dominant bearish candles. It looked like it's tied up with this, but when you look at these two plus this three, and you know that this green was indecisive and the market don't know what it's going to do, it's coming down. And if you aren't sure what the market's going to do when it comes to these three candles, all you have to do is just wait. So if you don't feel confident to take entry on this third candle here, you can wait for the fourth one to come to take entry. If not, you can take it there. Okay guys, thank you everyone. This is Cam Jones, FX Analysis. Thank you for watching.